Ladies and gentlemen, thank you for standing by. Welcome to the Tel Aviv Stock Exchange Q3 2019 Results Conference Call. All participants are present in a listen-only mode. Following management's formal presentation, instructions will be given for the question and answer session. For operator assistance during the conference, please press star 0. As a reminder, this conference is being recorded November 26, 2019. The recording will be publicly available on Tase's website. With us online today are Mr. Itai Ben-Zeev, CEO, and Mr. Yehuda van der Walde, CFO. Before I turn the call over to Mr. Itai Ben-Zeev, I would like to remind everyone that this conference is not a substitute for reviewing the company's quarterly financial statements and interim report for the third quarter of 2019, in which full and precise information is presented. In addition to IFRS reporting, we might mention certain financial measures that do not conform to generally accepted accounting principles. Such non-GAAP measures are not intended in any manner to serve as substitute for our financial results. However, we believe that they provide additional insights for better understanding of our business performance. Reconciliations between these non-GAAP measures and the most comparable related GAAP measures are included in tables that can be found in our earnings press release and in the slide presentation accompanying this call. Both can be accessed on the investor relations portion of our website at www.tase.co.il/en. Mr. Ben-Zeev, would you like to begin?
Well, it's evening time here in Israel, so good evening everyone, and thank you for joining us today. I'm very happy to host you in our first earnings call as a public company. As you all know, on August 1st, we achieved an historic landmark by completing the first ever global IPO on Tase. The offering was a remarkable milestone for Tase, and it signifies the opening of the Israeli capital market to the global institutional investors universe. Tase securities were listed following a secondary offering of approximately 32 million shares. The offering was fully subscribed and approximately 225 million shekels was received in consideration. The offering was made as a global offering under which the shares of the company were sold to institutional investors from the United States, Europe, Asia Pacific, and Israel, and also to the general public in Israel. The success of the IPO was reflected in the market value of the share and the company's entry into the leading indices of the stock exchange, such as the Tel Aviv 125 index. Our aim and hope is that this successful IPO will pave the way for other companies to make similar global offerings and thereby bringing more international investors to Tase. As we stated in the prospectus, according to the demutualization law, if a shareholder who holds Tase shares before 2017 sells his shares, he is required to transfer to us the full difference between the actual consideration and 508 shekels per share. Since the IPO, two historic shareholders have sold approximately 2 million shares. So, according to the law, in respect of the sale, these shareholders transferred an amount of approximately 9 million shekels to the company. This amount will be carried directly to our equity and not to our profit. We are pursuing and implementing our strategy plan that was launched in 2017. We are confident in our growth prospect and in our positioning in the Israeli capital markets. I would like to highlight few of our main initiatives: increasing and diversifying the companies that are listed on Tase, adding new products like foreign ETFs that are traded in Tel Aviv. We were very proud to register BlackRock's ETF iShares here in Tase. 23 of them are already traded. Opening the stock exchange to new members, including foreign members such as Jefferies and Flow Traders. updating the membership model for Tase and its clearinghouses, according to which Euroclean Bank decided to join as a custodial member of Tase Clearinghouse. Leveraging Tase capacity to offer additional services, as such, a couple of months ago, we launched co-location services. Few clients from Israel and abroad have already joined this service. And of course, expanding our data and connectivity services. We have developed a variety of information products that serve investors, developers, and information providers in Israel and around the world. We launched a service according to which we provide direct and convenient access between London-based data center and our data center. In addition, in the next few months, we will launch an API platform in order to enhance our data distribution capabilities. The quarter results reflect the advantage of our operating leverage. It illustrates the potential in the structure and nature of Tase and its positive impact on the company's results. As we believe in Tase's long-term potential and in the Israeli capital markets, we were delighted to see that FTSE Russell shared our vision and announced in September the entry of Israeli government bonds into two world government bonds indices with effect from April 2020. And now I would like to hand over to Mr. van der Walde, who will continue with a review of the quarterly results.
Thank you, Itai. Good evening, everyone, and thank you for joining us today. I am very pleased to participate in our first earnings call as a public company. Let's start with slide 4, which contains some of the key highlights of the third quarter results. Our revenues for the third quarter increased by 14% compared to the third quarter last year and amounted to 66 million shekel. Adjusted EBITDA for the third quarter totaled 17 million shekel compared to 11.6 million shekel in the third quarter last year, an increase of 47% between the quarters. Our third quarter performance demonstrates the structure of our cost basis that concludes mainly fixed costs. Financing income in the third quarter of 2019 increased by approximately 1,200% compared to the third quarter last year and totaled 3.1 million shekels. The increase was mainly influenced by a positive of 1.5% return on the company's investment in the held-for-trading financial assets. This strong performance generated an adjusted net profit of 7.2 million shekel, an increase of 266% over last year's third quarter. After going over the highlights of our financial results, let's take a deeper look at the composition of our revenues and expenses. Let's go to slide 5. Our revenues from trading and clearing commission increased by 11% compared to the third quarter of last year and totaled to 28.2 million shekel. 8.8% of the increase is due to an extra 5 trading days in the third quarter compared to the third quarter last year, which were added to this third quarter due to the timing of the Jewish holidays. Another reason is a higher daily average trading volume. Our revenues from listing fees and annual levies increased by 29% compared to the third quarter of last year and totaled 13.5 million shekels. The increase resulted from two main reasons. First, an update of the annual levies for companies. Second, commencement of charging annual levies for ETFs issuers as of the last quarter of 2018. revenues from the clearinghouse services totaled 12.9 million shekel, similar to the corresponding quarter last year. Our revenue from distribution of data and connectivity services increased by 23% compared to the third quarter of last year and totaled 10.4 million shekels. The increase includes approximately 1.5 million shekel that was presented net from cost in the corresponding quarter of last year. I will now discuss our expenses in the third quarter. Please go to slide 6. The third quarter, our expenses totaled 60 million shekel, an increase of 8.8% year-over-year. The expenses related to employee benefits increased by 6% and totaled 33.1 million shekel. The growth in the expenses reflects the annual salary raise and the provision for short-term employee benefits. Marketing expenses increased by 50% compared to the third quarter of 2018 and totaled 1.7 million shekel. The increase is due to the new sponsorship agreement with the Israeli National Football League, which started in the third quarter of 2019. The depreciation amortization expenses increased by 26% compared to the third quarter of 2018 and totaled 10.8 million shekel. The main reason for the increase reflects the application of IFRS 16 leases that contributed 2.1 million shekel to the depreciation expenses. I would like now to review our financial position highlights. Please go to slide 11. We have a solid and simple balance sheet. As of September 30, our equity totaled 589 million shekel and comprises 75% of our balance sheet, excluding open derivative position balances from our clearinghouse activity. In addition, we have approximately 290 million shekel in cash and investment in financial assets. We do not have any financial debt. We have 136 million shekel excess liquidity and 284 million shekel excess capital above our regulatory requirements. The excess liquidity increased by 37% from the beginning of the year. This includes approximately 22 million shekel. The excess proceeds from our IPO and from selling shares by one of the company's shareholders, which have contributed significantly to the increasing the company's liquidity. It should be noted that in October 2019, another shareholder sold shares which he held prior to 2017. Consequently, we received the surplus consideration of 2.2 million shekel, and this will be carried to the company's equity in the fourth quarter of the year. And with that, I will turn the call back to our moderator to conduct the Q&A session.
Thank you. Ladies and gentlemen, at this time, we will begin the question and answer session. If you have a question, please press star 1. If you wish to cancel your request, please press star 2. If you are using speaker equipment, kindly lift the handset before pressing the numbers. Your questions will be pulled in the order they are received. Please stand by while we pull for your questions. The first question is from Dan Fannon of Jefferies. Please go ahead.
Thanks, and good evening. Itay, you mentioned some of the initiatives that you're excited about and some of the momentum you saw in the third quarter. I guess as we look to 2020 and think about the next year and even beyond that, in your during the IPO process, there was several new initiatives that you and the management team have been working on. Can you talk about what you're most excited about, or the momentum building within maybe the top 2 or 3 of those initiatives that we could see kind of flow through to revenues and or growth in that kind of next 12 to 18 months?
Yeah, sure. Hi, Dan, and good morning to you. I think that one of the beauty in our business model is that we don't have one specific item that we believe it should be the growth driver, but we have a few. I think that the data and the connectivity is by all means one of the most important ones because it took us some time to gather all of the information and start look at the data as a line of business. We believe that the API will create interesting opportunities for us going forward. The co-location, which is something that went live only a few months ago, we already have a couple of the Israeli banks that are in the colo and also an international player. And once we'll have the full racks up and running with active clients, it will generate revenue not only from the colo but also from the trading and the data. I think a very important thing is the retail broker. Currently, we don't have in Israel any retail brokers, even though the Israeli public has almost $300 billion just sitting on cash accounts and short-term deposits. We are seeing good positive traction from the sponsorship agreement that we did with the soccer league, and we are seeing more and more people getting interested. So we believe it's only a question of time before we'll have new institutions that will start offering trading capabilities to the Israeli public. Another important issue is our product offering. I've mentioned before BlackRock ETFs. This is a project that we've worked on for 2 years. It's always difficult to bring the first international player into your exchange, but once you have the first name and the first market maker, I believe that some of the competitors will come as well, and because we have a large industry of institutional money in Israel, the Israeli institutions have $500 billion AUM, and some of it is invested outside of Israel. So a part of the side that we want to bring good quality companies and products that reflect the Israeli economy and into our economy. At the same time, we want to bring them exposure to various securities, but we want them to trade and get that exposure on products that are listed and traded on the exchange. And this is exactly what we did with iShares ETF, and we have other plans and thoughts to do so. I think that another interesting tool for us is if we'll be able to get, like we did a global equity offering, to have a global debt offering, because bond market is not an OTC market but is being traded in the exchange as if it was equity, which is quite unique when you compare us to other exchanges. We believe that in due time we'll be able to get well-branded global organization that will do global debt offering on the exchange. They will utilize the Israeli institutions, but they will also approach international institutions. And once we have the first big name that will do so, obviously it will be a very positive PR for us attracting other brands. I think that we just became 2 years ago a for-profit company. So in a way we are doing things that other leading exchanges did 5, 10 and 15 years ago, and giving the strong fundamentals of our economy and the ingredients that we have in the economy, we feel confident about our growth prospect going forward.
Great, that's helpful. And I guess if we think about, you mentioned the co-location racks and filling those out, I guess how are those conversations going? Can you talk about any specifics around percentage of that's filled, or an outlook for when you think you might be at I don't know what the, not necessarily capacity, but kind of momentum in that segment?
Well, we started with 17 racks in our co-location, as we stated in our prospectus. We kept some space, for additional racks in case we want to enlarge it. Currently, with regards to the agreement that we are signing, I can say that for sure we know that we'll have a few racks that will be up and running. We don't know the exact number because in a couple of the clients that we are now in negotiation, it also questions the amount of services they want to take. So, because for some of the things it's a full rack, for some of the things it's an empty rack. I don't know when we will fill the whole 17 racks. Obviously this is something that can happen in 4 or 5 months, but it can also happen in 18 months. We don't know. When we started the co-location and we looked at other exchanges, obviously we knew that once you have clients in the co-locations, it's only a question of time before you fill the whole racks. So we are happy that we already have existing clients in our co-location. So I can't give you, exact numbers because honestly we don't know and we can't anticipate the exact growth prospect that we'll have with the colo.
Understood. And then I guess just to follow up on the listings opportunity, I think you've highlighted the number of companies that are based there but listed elsewhere, and the potential for dual listings and the reduction in some of the requirements. I guess, can you update us on the conversations you're having and potential, I don't know if it's the backlog or the opportunity that you see as you look to 2020 and, the opportunity to potentially sign up, kind of more on not just the primary, but it seems like the dual listing is the kind of more near-term opportunity.
Yes, I also want to mention, the listing that we have from our domestic market, because we are a relatively young country, so we have a lot of businesses that the owners are around 70 and are thinking about the next generation. And a couple of days ago, Yochananov, which is the third largest food chain in Israel, completed an IPO of a market cap around $700 million, which in Israel terms is a relatively nice number. So we have a nice pipeline of Israeli companies that we believe that will do IPOs in the next couple of years. And when we look at the high-tech segment and the dual listing, so as we stated in the prospectus, it was not the case in previous years, but now we have a completely dual listing framework that the company doesn't have any additional burden whatsoever. They just need to file a report, a request, and then they start to trade their shares. We know that a significant portion of the 50 plus companies that are currently dual traded, their trading portion is being from our exchange, so we know as a fact that it's enlarged liquidity and not the opposite. We see it as a free option. We are speaking with all kinds of companies about that possibility. I believe that once we'll have a couple of the more largest, more familiar names that will do the dual list, then it will be much easier for us to attract other company to do it. Obviously, we have almost 100 companies that are Israeli oriented, but currently they are not being traded on the exchange. And I think that this is something that it's difficult to know the exact timing once it will kick in, but the moment it does, I believe that we will gain positive momentum out of it.
Great. That's it for me, and I can get back in the queue for other questions.
Thanks, Dan.
If there are any additional questions, please press star 1. If you wish to cancel your request, please press star 2. Please stand by while we pull for more questions. We have a follow-up question from Dan Fannon. Please go ahead.
Sorry, well, if I'm the only one asking questions, I got a couple more. So, on expenses and, kind of the nice margin expansion that you were able to generate this quarter, as you think about spending initiatives or potential incremental costs as you look forward, are there certain areas that we should think about that might have a bit higher trajectory or might see a bit more increase based on some of the plans or initiatives that you're working on to kind of accelerate revenue growth?
Well, nothing in particular. I mean, we are 4 months after the IPO, and I feel very comfortable from everything that we stated in the prospectus and conveyed to the investors through the roadshow. So we don't see any incremental increase in our expenses going forward besides what we stated in the prospectus.
Got it. And then just one more on pricing and, thinking about changes or other, potential things being contemplated from a pricing structure, whether that's on the volume side or other of the products and or services you're offering. Are there annual changes or things that we could think about for 2020 that might be either positive or negative that have either been announced or being contemplated?
Well, there's a couple of things that are being contemplated. All of them are positive, and it has to do with our product offering and services. Certain things that we are reviewing and thinking of doing some adjustments and modification going forward.
Okay. All right. Well, thank you.
Thank you very much.
There are no further questions at this time. This concludes the Tel Aviv Stock Exchange Q3 2019 Results Conference Call. Thank you for your participation. You may go ahead and disconnect.